Hello, fellow investors. What would you think if I said that there was a company trading at price to earnings of 1, price to book of 0.1, and price to sales 0.1 as well? The company had stable business model and 200 million customers. Despite all of that, you would probably hate the company. Well, the company that I'm talking about is VEON. VEON is telecom operator with over 200 million customers. They are operating in Russia, Pakistan, Bangladesh, Ukraine, and other ex-Soviet countries. Russia is the most significant market, with 50% of their revenues coming from there. After that, Pakistan and Ukraine are the second most important, while Kazakhstan is a good stable market, and in Bangladesh they do have significant growth potential. Here you can see their customers in millions on each market and ARPU, which means average monthly revenue per user in US dollars. While Pakistan is the largest market in terms of users, the Russian customers' average monthly revenue is 5.5 times more than in Pakistan. This also shows the possible growth potential. Imagine if they increase the Pakistan and Bangladesh average revenue per user from current $1.2 and $1.3 to $12 in the next 10 or 20 years. That would increase those regions' revenues by 10 times, and if there is economic development, I can see why it couldn't happen in 20 years. Even just increasing average revenue per user from $1.2 to $2.5 would be huge. Anyway, it's quite interesting that you can buy a company that has 200 million customers for just $800 million. So basically, you are paying $4 per each customer. Well, it's not quite that good, as you'll get about $25 to $40 of debt per user, depending on if you count lease liabilities as debt or not. However, if they can service the debt and make any profits on top of that, it will lead to great returns. Anyway, more about that later. While telecom operators in the West are already investing in 5G, VEON is still finishing their 4G investment cycle, but in the recent years they've increased capital expenditures in many markets and achieved quite good 4G coverage. In terms of market position, there are 4 major telecoms in Russia, and they are tied in 3rd place. In Pakistan, they are market leader. In Bangladesh, they are 3rd biggest telecom, and they are market leader also in Ukraine. VEON was the first ever Russian company listed in New York Stock Exchange in 1996. Since then, the stock performance has been, well, a roller coaster. The stock was listed for $2 per share, and the share price went all the way up to $40 per share during the emerging markets boom prior to the global financial crisis. And today, the stock is trading at just 34 cents per share. Currently, they are listed in Nasdaq and Amsterdam Stock Exchange. In general, it's difficult to make high returns in telecom industry, as the capital expenditure requirements are high and the competition is tough. With telecoms, there is no brand loyalty. As long as there is no difference in network quality, people will buy the cheapest available plan, which often leads to these never-ending price wars between operators. Also, once the heavy capex cycle is over, there will always be the next G network technology, and the capex cycle starts all over again. In the past decade, the entire telecom sector underperformed the rest of the market. It's common to see high debt levels and low returns on invested capital in telecoms. The same problem happened with VEON. On top of that, they borrowed mostly in US dollars, while their revenues were in Russian rubles and other developing markets' currencies. Since 2014, their revenues dropped significantly. It was partly because they had a stake in Italian Telecom, which merged with some other telecom, and onward the earnings were calculated with equity method, meaning that instead of consolidating their revenues, the Italian operations were recorded only in the profit or loss line. However, at the same time, the Russian and Ukrainian revenues dropped significantly, while US dollar debt and interest costs stayed the same. Later in 2016, they also divested their Italian Telecom, which significantly lowered the group debt. However, currently the market cap is only $800 million, while their revenues are around $8 billion, and they used to make free cash flows between $500 million and $1 billion per year. Between 2017 and 2019, they paid out $500 million in annual dividends, which would be more than 60% dividend yield on the current stock price. If we take a look at VEON's balance sheet, their total assets are just under $14 billion, when I exclude $2 billion of goodwill and some other useless trash from their balance sheet, and the equity value is slightly negative. However, when I look at their foreign currency translation reserve, it is almost $9 billion negative. That's an accounting trick, as the assets they've invested in their operating companies are recorded in local currencies, while the group consolidated earnings are translated into US dollars. So when the currencies of operating countries depreciate against dollar, it means that those assets' values on the balance sheet also go down in dollars. As it is just an accounting trick and no real value is lost, I'll add back the foreign currency reserve to get a clear picture how much they've invested and what is the actual accounting value of their assets. So when I add foreign currency reserve and remove the goodwill, I will get total shareholders' equity of $7.8 billion. If we take a look at the group structure, the holding company is based in Bermuda and their headquarters is in Netherlands. The Bermuda holding company owns their operating entities in each country. So in Q2 22, they had $2.3 billion in cash and gross debt, excluding lease liabilities, of $8.7 billion. Around $2.5 billion of their debt is with variable interest rate, and the rest are fixed. So interest rate hikes do not impact them strongly immediately, but each year when they have to refinance expiring notes, the overall interest cost will go up. However, their average interest rate is already 7%, so the impact on them going, let's say, from 7% rates to 12% rates is relatively lower than, let's say, some Western company going from 1% borrowing rate to 5% borrowing rate. Of that debt, $1.9 billion was on their Russian entity balance sheet, and around $4.9 billion of their debt were in the holding company balance sheet. $900 million of the holding company debt represent intercompany debt to the Russian operating company, and so far the Russian entity has been able to pay interest payments to the holding company. However, that might change in the future. For now, the Russian operating company is not able to make any dividend payments to the holding company, so most of the Russian profits will stay in Russia. However, they can focus on lowering debt levels there for the coming years, and we'll see if the situation normalizes in the future. After the Q2 presentation, VEON finished their sale agreement with Algerian government, where they sold their 40% stake in Algerian Telecom for $682 million. So that further strengthened their cash position. And they currently have $3.2 billion in cash, of which $2.5 billion is held at the headquarters level, so there are no currency restrictions toward that cash. If we take a look at their debt repayment profile, their cash position is sufficient for the 2023 and 2024 debt repayments. However, in 2025, their $1 billion recovering credit facility expires, and on top of that, there are a total of $2.6 billion worth of debt repayments coming. So with the current world situation, I'd imagine the refinancing would be quite difficult, but we'll see how things change by then. From the $2.6 billion of maturities, around $1.6 billion is Russian ruble denominated debt held under the Russian operating companies, and I don't see any reason why this couldn't be refinanced. Then in 2025, the US dollar denominated bond maturity and recovering credit facility expiring worth of $2 billion total could cause financing trouble if things in the world are still messy. However, they do have 2 years of time to generate additional cash flows, seek new refinancing options, and to make asset sales. In 2021, they made a sale and leaseback agreement for their towers in Russia, which they received almost $1 billion. They do still own a lot tower assets in other operating countries, and it is their strategy to negotiate sale and leaseback agreements with those. It seems to be a general trend overall in the industry that telecom operators no longer own the towers, but rather lease it from third party. This way these towers can be used more efficiently by multiple operators, it decreases the capital requirements, and I guess it's more comfortable for the telecoms to lease from third party rather than their competition, so they prefer this business model. So what about the sanctions? Because VEON is Bermuda-based company headquartered in Amsterdam, it's not currently under any sanctions. The largest owner with 47.85% stake in the company is Ukrainian-born Russian oligarch called Mikhail Fridman. He is personally sanctioned by the European Union, UK and the US, but because his stake in the VEON is less than 50%, he is not the controlling shareholder. Thus, so far, VEON is not currently under any Western sanctions. Of course, this situation could change at any time in the future, and it's also good to keep in mind if your brokerages are no longer allowed to hold these shares, then you would be forced to sell, I guess. But I don't see that scenario happening so far. Only sanctions that apply for now are currency restrictions so that the Russian and Ukrainian entities cannot pay out dividends at the moment, and export sanctions for telecom equipment going to Russia, but that will impact all of the Russian telecoms, not just them. Actually, this year their operations are going quite well. Russian revenues are up year over year as the ruble is getting stronger, while obviously Ukrainian revenues are down, but they still manage to operate profitably in Ukraine during the whole war. Pakistan is also facing high inflation, and while they have increased prices there, they cannot compensate fully the inflation with price increases. Pakistan also recently increased their withholding taxes, which caused additional negative impact. So the worst investment scenario would be that Russia decided to nationalize all the foreign-owned assets, and they also took over the entire Ukraine or totally destroyed that country. Even if the worst scenario happens, I'm trying to figure if there is still some value left. If we exclude Russia and Ukraine, the group does around 1 billion EBITDA per year. Then let's deduct the capex, so the earnings before interest and taxes, excluding Russia and Ukraine, are around 500 million per year. As 1.9 billion of their debt was in Russian operating company balance sheet, their absolute debt levels would go down, but relative debt to EBITDA would go significantly up. Currently, their average borrowing cost is 7%, but let's say that it goes up to 11%. It might go much higher as creditors would be very hesitant if they could even refinance them at all. However, if they could get refinancing at 11%, they would operate pretty much in cash break-even. Then, if they could grow over time in their markets, they would be able to slowly lower their debt levels and even pay out some dividends. I don't think there is much value left if the worst scenario materializes, and I wouldn't bet that company operating mainly in Pakistan and Bangladesh with net debt to EBITDA around 7 would get refinancing. So if the worst scenario materializes, there might be some value left, but I wouldn't count on it. So if you consider investing in VEON, you must believe that there is pretty good chance that Russia will respect foreign ownership, and maybe in 5 or 10 years things will go back to normal. Also, VEON has been investing on all sorts of digital platforms, from online banking, entertainment, music, etc. The users that also subscribe for these platforms pay much higher average revenues, and it is a significant boost for their overall revenues. However, I don't know how to value all of these platforms, and for now it is more interesting to see what happens to their Russian and Ukrainian operations and how they can refinance debt maturing in 2025. Still, you will get all of these platforms on top of your investment for free, which is always nice. Maybe something big grows from there, who knows. So when making a valuation, in my base case scenario, I assume free cash flows will fall from 500 million to 200 million because of the higher interest rates, and they'll keep growing their free cash flows annually at 4% rate. This offers valuation of $4 billion. In the best case scenario, even though the interest rates go higher, they will be able to pass through the cost to their customers, and they will go from 500 million free cash flows back to their historical levels, which was 1 billion in free cash flows. It would make net present value to 13 billion, which is 16 times higher than the current market cap. In the bearish scenario, I assume that they will lose control over Russian and Ukrainian businesses, and they'll keep making 25 million in free cash flows, of which they could pay half in dividends. That would still leave some value left, but it's down 75% from the current market cap. And then of course I added the worst case scenario where this investment goes to zero. Also, I'm using 10% discount rate in all of my valuations, as it is my minimal required return. No matter if I value Apple or some crazy company like this, the discount rate will always be 10%. With crazy companies like these, I just want to either be more conservative on my cash flow assumptions or buy that greater discount relative to the net present value. So even if I give only 5% chance for the best case scenario and 10% chance to the base scenario, the net present value is $1.1 billion compared to the current market cap of $800 million. From per risk-reward perspective, the company is still undervalued, even if there is 85% chance of losing all or most of your investment. Now, I personally think there is more than 15% chance for the base or best scenarios to materialize, but there is no correct answer and it's up to you to judge. Maybe there is 50% chance of this being good investment, maybe there is 0% chance. Nobody can say for sure, but if you want small exposure to high risk, high reward bet, that you are okay if you lose everything, this is one to consider. That's everything for this video. Thanks for watching and bye.